All right, everyone. Welcome back to the Beat the Odds at Business and Wealth podcast. And today I am back with Josh Spurrell, and he is still in the Vancouver office. Lucky duck. Hey, Josh, what are we talking about today?
Talking about how I'm never coming home. I'm just going to stay in the Vancouver office, Trevor. That's what we're going to talk about. No, I'm just kidding. We are going to talk about is Canada going to enter a recession in 2025? And good topic because it's meant to, rattle you out of your bags. I think that's the main thing. And, it's a special 1-year anniversary session, right? This is our 52nd week in a row that we've done this, I think.
It is. 52 weeks, when we first started this, I was like, okay, I wonder how long, because remember, before we started doing this, we said we were going to do this. We said we were going to do it. We bought this equipment in like 2020, 2021. We're like, okay, now we're going to do a weekly podcast. We had this thing set up for years. And then, I don't know what it was. I think you got shamed at a boot camp. And someone was like, hey, man, you're not going to make any content. And we're like, oh, yes, we are. And here we are a year later, 52 weeks, 52 episodes in. And, we've had some decent success. Like some of ours have gone on to go somewhat viral, hundreds of thousands of views, which is great. I'm hoping that this one does as well because, Canadians are oddly like they like to complain, but don't like to take a lot of action. So I'm hoping that, people won't want to take action. Even though there are, rumors about a recession taking place in Canada over the next little while here, maybe 2025, 2026, which we're going to get into. I hope that this podcast will get people out of their complacency and get off their butts and do something about it. What are your thoughts, Josh?
Yeah, that is that is kind of the catalyst. Like it's fear that's sold to people that generally forces them into bad financial decisions. And just because there's a fearful outlook or a negative outlook does not mean there's an opportunity not to make money. So, and that's the key here, right? It's, I'm one of the most pessimistic people out there. When you talk to me on my economic outlook, I'm like, yeah, well, I don't know why we care about who's getting elected. It's like the Titanic already hit the iceberg. It doesn't matter who's the captain now. Like it's going down. You got to get on the life raft, right?
Yeah.
And this show is the life raft.
Now we're backing up and going another run at it. That's what's happening with the Titanic.
It's like, and so this show is the life raft. So like you have to have a little bit of a sense of humor on how bad it is because it is really bad. But there's a playbook. It's not, it's not super obvious what it is. That's why people get, stuck in the wrong decisions. But, let's dive into it, Trevor, and show them the kind of the methodology. So I will share the screen here, Trevor. And okay, so all over the place, Canada's unemployment will go past 7% this year, but no recession, according to the OECD. So, of course, they're always, extraordinarily trustworthy, but the OECD is not like it's not like a Bloomberg. It's a globalist organization who releases reports, somewhat infrequently. Let's call it somewhat infrequently. So, do I think we're going to go past 7% unemployment? Yeah, I think so. I think we're almost there, right? It's 6.9, I believe. So, that's right around the corner. So. But no recession. So, the problem with like as a recession is, I guess the first thing with a recession is just defining the recession because, people have these kind of crazy, crazy definitions of what a recession has to be. That's all based on feelings and, pixie dust and flowers and things like that. But it's like two negative quarters of GDP, people. Like two negative quarters of GDP. Let's just get off the fence and let's call it. And whatever the powers that be try to label it, that's fine. They can't really decide.
Yeah. So two negative quarters of GDP. So with that being said, how has the government or the people who do the reporting for the government manipulate the numbers so that it doesn't look like we've had two negative quarters in a row? Because, everybody senses the inflation or the price inflation of stuff at, things for commodities like, groceries and gas and whatnot. So how do they, muck with the numbers a bit so that it feels like, technically we're not in a recession, but it sure damn well feels like we're in a recession?
Sure. I'll walk you through that one here. It's okay. Share the screen. Here's where we actually are. So Q1 of 2025, we're at a 2.2% GDP growth rate, and here's where people say it's like, well, it doesn't feel very good. Like, why does if this economy is growing, why does it feel like it's not growing? Why does it feel like everything is more expensive than it needs to be? And I mean, we have some outlooks on where this thing is going here, and that's Q1 of 2025. This is a Bloomberg survey of economists and where they think it's going, and they see like very, very slim here. They're expecting a pullback in Q2 because of the tariffs and the uncertainty, and people don't deploy capital in uncertainty, and there's layoffs, and that's probably likely to be negative. Q3 you can see is a lot more questionable. I mean, we're trying to pick who, on Q3 on is it going to be a negative quarter of GDP? It's like, I don't know, pick who's going to score the first goal in the Stanley Cup Finals. Probably McDavid, I guess, but maybe not. You know what I mean? Like it's like it could be, it could go either way. But as to your point, it's like why does it not feel worse? Like why does this not feel like it's like -5 or -10 all the time, right? Because like my paycheck doesn't go as far. My quality of life seems to be declining. I can't afford a house. My credit cards are consistently increasing. Like why does that actually happen? Because GDP is the aggregate production, but it's the aggregate production of a population that's going up. And so here is right on the Government of Canada's website. We have 41,668,500, and we just lost one, 524 people. So 524 people. I don't know where that one guy went, but he just left, and they counted him in real time. So, that's what the government says is our population today. So just because the product, like just because the gross domestic product, and so the aggregate of the goods and services is going up, that doesn't mean your share of the goods and services going up. That just means the total population is producing more. But if the population is expanding, everyone's share is expanding fast enough, even if the gross domestic product is going up, your share of the pie, the size of the slice of your pie is going down, right? And that's what we've been feeling, right? And that's the lever. And so when we're trying to project where it's going to be, are we going to be in inflation? Are we not going to be in inflation? It's like we're betting against the casino, and the casino controls the rules. It's like we're not even playing blackjack here. We're playing the slot machines where they can program whatever the heck they want. And when I say program, they can choose the number of people that they let into the country or not. And so ultimately, if they let more people in, it will make the GDP growth rate appear more palatable. And if they, if they don't, it's like maybe we get that 2 consecutive quarters of a pullback. But that's it's not a more overt nefarious, I'm changing the numbers and lying on the data. It's just there's a limitation of GDP as opposed to GDP per capita.
Okay. Now, with that in mind, seeing as this show is the life raft, so I know that you've talked about the money supply, and if the money supply isn't boosting up, then it changes the inflation numbers and so forth. So over the next 18 to 24 months, being the life raft, what should people be doing? What should they be looking for regarding that, and how should they prepare themselves? Where should they start looking at investing? Is that 18 to 24 month time horizon now, or what should we be looking at regarding the money supply and this news of a possible recession?
Well, let's look at because when you're investing, I mean, if you're not investing in your own share of the pie. What you're investing is there companies that can benefit from an expansion of the GDP, even if people's share of the pie, even if the size of their pie is getting smaller, okay? And that's what we look for. And I want to show you like how probable this is. So I'm going to share another screen here, and this is more of a forward-looking outlook. And these are the population projections right from the Government of Canada website here. And just look at our population growth from 21 million, just under 22 million, until we have the 41 million people today. But even just look at how, I want to say, unrealistic the projections are. Look at the low growth number. I mean, under the low growth scenario, it's like they're trying to tell us that we're only going to have 45 million people by 2074. It's like that's kind of laughable. It's like I don't know who gets paid to assemble the low growth model, but just look at forget about like the complexities, and you're not a statistician. Just like look at the shape of these curves. Look at this right here, the change in the shape of the hockey stick from 21 up until 2024, where we're talking like heading into 2020, there was only 37 million people, and all of a sudden in 2024, we're at 41, almost 42 million people. So what is the probability that we're only going to be at 45 million people in 45 million people in 50 years? Like, come on, people. Like, is this are you being serious here? Like, is this actually a serious document? And so just look at the slope of these projections here, and you start to look at the low growth in the red, and you look at the kind of the medium projection in the purple, and then the high growth in the green. I would suggest, when I look at this, and when you just see the population growth in the last 5 years, that the high growth scenario is the probable scenario. Like, in fact, that's the high growth scenario seems more of the midline scenario. In fact, because when you look at it, it would actually be a deviation from the last 5 years, a significant deviation.
Yeah.
So even if they make good on promises to reduce immigration, to reduce restrict the inflow of people, it would appear that the high growth scenario is actually still the probable. It just prevents it from going into some exponential tailspin. If you just draw a trend line here from the black, it's like it would be much different based on if you extrapolate the last 5 years. So I would suggest the green line is actually more the midline approach. And so, like, looking out 1 to 2 years, pretty darn tough, right? But I always tell people I make decisions based on, there's kind of 3 time parameters. It's like short term. And most people think short term is something that's going to happen by lunchtime. And I tell them short term is something that's going to happen in the next year. And then medium term. And most people think medium term is something that's going to happen by the weekend. And I tell them medium term is anything that's going to happen in the next 10 years. And long term is 10 years or more. And at a minimum, what you need to do is, plan for long term investments, 10 years or more. And even better than that, it's like, what do you buy? It's like, you want to buy assets that you think you can hold for 100 years. Even though we're not expecting to live for 100 years unless Elon plants the chip and, we all just live as robots, quasi-robots for 300 years or something. I don't think that's going to happen. I mean, it could happen, I guess, but the likely scenario is like it's not. But you're still making investments on the 100 years. It's like, and there's 2 reasons, because it just talks you out of bad investment decisions. It talks you out of short-term thinking. It talks you into, pulling that lever at the casino, thinking what's going to happen in the next 24 months when the game is rigged. The game is rigged by governments who can, let the floodgates of people open in or restrict the floodgates, and it's rigged by large swaths of capital that can be deployed into the market all at once, and it'll pump the prices or retract it at a moment's notice. And like, we can't project that, but what we can look at is good long-term investments, minimum 10 years out. And I would suggest it's like you should be making investments 100 years out to make better decisions, more discerning decisions. And so when I look at that, it's like, we're not going to have 42 million people in Canada, okay? We are going to have 46 million people in Canada in 10 years. And I would say That's the middle of the road case, okay? And how we base that is like, okay, so how do you make the good investment decisions? How do you get on the life raft? And it's like, now you have to start looking at the investment opportunities that you have, the investment opportunities that even if people's share of the like size of piece of the pie, the size of their piece of pie is shrinking, what are the companies that benefits because the pie itself is bigger, even though your share of the pie might be small? You might be upset that your share of the, your piece of pie is smaller, but there are companies who are going to profit as long as the pie gets bigger. That's all they care about, right? And you start looking at, who are the government protected monopolies, and you start looking at and that's what I call them. There's no technical term of that. That's just my, somewhat frustrated view of those companies. What I've nicknamed them, the government protected monopolies. It's like you have the banks and you have the telecoms and you have the energy producers, and it doesn't matter if your piece of pie is shrinking, they're making more money. Like, they're making more money. The price of their shares are going up. The dividends that they pay per share are going up. And it's a pessimistic worldview, but like I said, the ship already hit the iceberg. You got to get on the life raft. You got to get out of the denial of what's happening here and find the investment opportunities that make sense. That makes sense, right? And I think that's, hopefully that's useful for people, because there is a path forward despite the insanity. You could spend all day discussing, should we increase population by this much? But it doesn't matter. It's just the fact, will they? Just will they increase it?
Yeah, exactly. Now, with all that in mind, I think people should understand, things that are on the corporate treasury list that we provide in the boot camp. Of course, people can do whatever they want, and it's not specific investment advice, but it's just the ones that you choose and put on that list. And you can just go down the list. You can see banks, you can see energy companies, telecom companies, things that people will require going forward. It's pretty easy to see who the government protected monopolies are, or as Bernie Sanders would say, the oligarchs, right? The oligarchy. But it is what it is. Like, rather than fighting against it and being angry about that and wishing it was different, it's just a fact of life. Like, we live in a completely rigged monetary system, and there's no way of getting out of it unless you completely decouple and you go live in the woods somewhere and learn how to be very crafty with tree bark and fighting bears. It's just not gonna work for you. So this has been a good discussion. What else do you have? Any parting words, Josh, for us?
Yeah, so don't let these like short to medium term projections kind of rattle you out of your positions. It's like, you need to, in order to succeed, you need to realize that the powers that be manipulate the short term performance and even so much the medium term performance. But over the long term, the market forces will win, and the market forces are an increasing population. That's what it is, and it's we can already see. You already start to see that these companies, they're not having less and less influence and less power. They're having more and more influence and more power. And so that's likely to continue. You need to get yourself in a position of like, how do you actually access capital to make these investments? And then once you have that capital, which investments that you make, right? And that's the point that people have to be making here. Is that you're not making an investment because you think GDP per capita is going to be -1 and -0.5 in the next 2 quarters. You're making an investment decision because you think that there's going to be 46, 47, 48 million people in 10 years, and some companies in Canada are going to benefit disproportionately from those. And we can see the evidence of who these companies are based on the last 25 years. Like, what I'm saying here is actually not that new. It's just the rate that it's working is speeding up. People look at the Canadian stock market and think that it's a laggard, and it kind of is as a whole compared to the S&P 500. And still, you start looking at the government-protected monopolies, the ones that have been obliterating the S&P 500 for 25 years, 26 years, and it's like, and all the forces that allowed them to do that are speeding up. They're getting better. It's becoming a more favorable environment for those companies to operate, despite the fact that your piece of pie is smaller. Despite that, it's actually it's there, and so that's the point where I hope it's helpful for people, because there is a path forward. There is a life raft. Unfortunately, it's not big enough for everyone. Even that corporate treasury list that we give out is like, I don't give out that corporate treasury list on YouTube because some of those companies are pretty small. It's like, I wouldn't want a bunch of capital going into those companies because I want to buy them for that price. It's kind of a boot camp only type perk for you. So I hope that's helpful for someone. Stay in your positions, realize you're making long terms. And if you're evaluating GDP and GDP per capita, it's like look at that population growth. Who are the companies? What are the investments that are going to make sense with that sort of population growth?
All right. Well, thank you everyone for watching. Thank you for people who are, commenting on the live chat. People are asking about gold and, getting into some discussions about MAID. We won't talk about that. But anyways, thank you so much. But you guys should definitely get your tickets to the boot camp that is coming up. When is it? November 8th, I believe it is. Check the website, spurrell.ca, spurrell.ca. Check it out. Bootcamp always sells out early, so get your tickets today and you'll get access to the corporate treasury list, or AKA the government protected monopolies that we recommend people would purchase in their own personal portfolios. That's it for me. Thanks so much, Josh. We'll see you next week.